We've all heard the saying, it's a stock picker's market. Well, this is a stock picker's market, but not only that, you have to be a picky stock picker because it's going all over the place. Technology's been down. They seem focused on every verbalization Trump makes, which just sends the market rocketing all over the place. A lot of people are short. I don't like to short unless the VIX is above 20, and right now it's hanging around 16. So it's really not volatile enough. There's not enough puts being put on the market to be excessively bearish. Now, Trump says he's going to do reciprocal tariffs next week. That could bring the market down, but he changes his mind every 5 minutes. He was going to do 25% tariffs on Mexico and Canada, and then he took those off because they were complying with the border and with the fentanyl, he says. And also, he is doing 10% on China, but then he was going to do a tax on what they call the minimus from China, and that's anything from China that costs less than $800. And sites like Chinese sites like Temu, that's Temu, they sell a lot of low-cost goods. They would be affected deeply. And he decided he was going to do that, take the minimus off and tax the items below $800. And then later on, he changed his mind. So I think what we have a president who floats ideas out there and then sees how the stock market reacts. So in a way, that's kind of good because it implies that he's going to try to save the stock market if we start tanking too bad. But right now, it's hard to be very bullish. I had pulled out completely from the stock market because I could see this coming. When you elect someone who's been twice impeached, who's had a civil case of sexual abuse against him and been convicted of a felony, it's probably predictable that he's going to be unpredictable. So this is what we bargained for. This is what we got. And so this is what we have to deal with. Also, he thinks about things just totally different from anyone else, which can be good in a way. For instance, with Ukraine, he's taken a different approach. He's taken a transactional approach. Now he's thinking, well, Ukraine has lots of rare minerals, and there's lots of rare minerals in the parts of Ukraine that Russia occupies. So that motivates him now to help Ukraine because Ukraine has said, when this thing is over, that they want to cooperate with the United States in developing their rare minerals, which we need because right now we're at the mercy of China, basically, because China has the most rare minerals of any country on earth. So suddenly, Trump can see Ukraine as a positive economically, which I think motivates him now to help them. So it's just a different way of looking at things, and it can be good. But my reaction to this, I decided I'm going to pick 3 conservative stocks, which are basically financial stocks because they've been doing well. And then I would pick my best 2 technology stocks, and I'm going to share those with you now. Just a friendly reminder that this is not financial advice because I do not know your personal situation. You need to do further research and gather further information to decide if the investments I present are right for you. My number 1 stock pick, and it is a technology stock that's also a financial stock, is Robinhood, symbol HOOD. And they trade stocks innovatively. They have their own little stock market created within at night, I guess. And they also have a thriving crypto market. And I like the way they do things. I don't do it myself. I have friends who are into it, and they seem to benefit greatly from it. But it's overpriced if you think strictly in terms of the price to earnings, which is at 55. And that would be overpriced for a normal stock, but it isn't overpriced for this stock, in my opinion, because its earnings growth rate is 50%. That harkens back to Tesla when Tesla was in the high growth stage. So we got this technology financial stock. It's in the right sector. It's showing growth like Tesla in the old days, and it's exploding upwards. It just keeps going upwards. Looking at the 3-month chart, it's made 90% in the last 3 months. It's almost doubled in the last 3 months, and it just keeps going up. And what makes me love this stock is Friday, the market went down at a pretty good clip, and it still went up. So that makes me love a stock like this. So I'm going to stick with it. Its relative strength is 71, which in my world means that it's not overbought yet. And I think it's that outstanding earnings growth rate that's keeping it in the game. The Magnificent Seven have not been doing good since the beginning of the year, and it's because of Trump's tariffs, the anticipation of it, the actual announcements of it, the meandering back and forth on it. These companies sell a lot internationally and are affected deeply by tariffs, and that's been the problem. You know, it was the Magnificent Seven. We now talk about the Magnificent One, and that is Meta. Meta is the only one of the Magnificent Seven that has really been doing well. Looking at the chart, you can see that Meta, since the beginning of the year to date, has made 22%. Amazon has made close to 4.5%, but the rest of the Magnificent Seven are all in negative territory year to date. So the tariffs and the anticipation of them is weighing on the Magnificent Seven. And my thought is, what smaller cap stock is most like Meta? And that would be the social media stock Reddit, symbol RDDT. Reddit is more speculative than Robinhood, as its price to earnings is 346. So it's way up there. But again, it's got that wonderful earnings growth rate of 41%. Okay, so it is more of a risk, but again, it has a wonderful chart that just keeps growing up. Again, it went up on Friday when the general market was down, and I love stocks that do that. Looking at the chart, you can see that it's been almost nothing but upsville for Reddit since the beginning of the year, as it has gone up over 37% since the start of the year. So this stock is wild. It does wonderfully. It's got a great earnings growth rate. It's not quite as good as Robinhood. Of course, almost nothing else is, which is why I'm high on Robinhood. But Reddit is a close second in my heart. And I put a 3% stop loss on both of these. In case it does a flash crash, but short of that, I probably will jump right back in even if it goes down. So we will see what these will do. After the DeepSeek tragedy, which popped the artificial intelligence bubble, I decided that I was going to pick 5 stocks and put $100,000 into each of them. 2 of them would be the best technology stocks, which I've already shown you, which are Robinhood and Reddit, and the other 3 are financial stocks. The first financial stock I'm picking is Goldman Sachs, and you're going to like the numbers on these way better because they are conservative yet very solid investments. Goldman Sachs has a price to earnings ratio of 15, which is great, an earnings growth rate of 18%, which is decent. As you look at the chart, you can see that it's going nicely upwards since the beginning of the year. It's made 14.5% year to date, and its relative strength is 69, which indicates that it's not overbought. So it's a very solid investment. JP Morgan's price is $275. They say that it's undervalued. They say its valued should be $325. Its price to earnings ratio is 16, which is good. Its earnings growth rate is a little on the light side. It's 12%. As you look at the chart, again, it's this nice, solid going upwards. And it's kind of the major bank name in my mind because I bank there, I guess. Its relative strength is 77, which is good. Morgan Stanley is a brokerage mainly, and its price is about 140. They say its value is 160, so it's undervalued. Its price to earnings is a good 17. Its earnings growth rate is an okay 14%. It has grown over 11% year to date, and its relative strength is 63. So all in all, these are all good numbers. This is probably my least favorite of the three, but still decent enough and representing a conservative investment to offset my wild investments in Hood and Reddit. We have the CPI coming up this week, and that'll be a big deal. Also, the jobs numbers are sort of mixed right now. We're all waiting to hear what Trump's going to announce on tariffs, and that will roil the market one way or another. So it's very hard to trade right now. I'm planning on trying to hold these as a swing trade just because it's ridiculous to try to day trade in this market. It can go up and down so quickly. It's unbelievable because of all the headline noise. So you're ahead to I've tried to pick some solid 5 stocks that can ride this out, and I think I have. And so let's see what happens. Thanks for listening.